Hey, what's up, guys? My name is Drew Adams, and today we're going to be talking about my top 10 favorite dividend paying stocks for 2021. Let's get into it. So, first and foremost, I'd like to educate and teach a little bit about what I know about stocks and investing because my goal with this channel is to teach beginner investors how to put their money into the stock market and how to invest their money in a smart way that's going to generate some good returns and have a good solid plan for the long run. And so, let's get into the numbers that I'd like to show you how to analyze when it comes to picking stocks. I like to choose stocks that increase their earnings per share 5 to 15% a year. This number right here essentially tells you how much the company is earning in revenue and how much they're increasing year over year, just to know that you're going to have a nice, safe dividend payout. And not only that, but also an increase in the value of the stock that you've purchased. One good practice when it comes to analyzing a company's stock is taking a look at the market cap. And the market cap is the value of all of the company's stock. And for me, when it comes to investing into dividend paying stocks, I like to see a company that has at least a market cap of $10 billion. And the reason for that is that means that the company is established. It's most likely going to be a company that you know and have heard of and have seen in the past. And so it's a very established company that will likely have good revenue and returns. And that is just one indicator showing that it could be a reliable company to invest into. When it comes to investing into dividend paying stocks, I feel more comfortable when I see at least a 5-year history of them consistently paying dividends over that period. Furthermore, I like to take a look at if they have increased the dividends each year as well. And so if they've hit those two key indicators, that is a very solid sign that the company has their all of their business in order and they're doing something right. And so another key indicator that you're going to want to take a look at is the dividend payout ratio. And so I like to see a ratio of anywhere between 35 and 55% on the dividend stocks that I invest into, but that's not necessarily a hard and fast rule. So for example, Apple has a very low payout ratio. And the reason being is because Apple takes a lot of their earnings and they reinvest it back into the company. And so the ratio is essentially what they pay in dividends against the company's earnings. And so just to clarify a little bit as well, there's a lot of other metrics and information that I take a look into when purchasing stock. And so I just wanted to teach a couple of different things that you need to be doing when you're investing into stocks. And so this is a good foundation for you guys if you're just starting. Go into a bunch of different stocks, practice these things, take a look at all of these statistics so that when in the future you're ready to start putting money into the market, that you do so in a way that's going to benefit you more. You're going to be more successful, you're going to get more returns, and you're going to have a more reliable investment. Okay, so let's jump right in. The very first stock that I like to talk to you guys about is Apple. Now, this company is a Warren Buffett company that he invests into. It's a very good company. Jumping into the numbers here, Apple is a growth stock, so you're not going to see the same type of numbers as far as dividend yield as some of the other stocks I'm going to review right now. But taking a look at the dividend yield, it is 0.61%. Their payout ratio is 18.68%. Their 5-year growth rate is 9.73%. on average over the last 5 years, and they have increased their dividend for 9 consecutive years. And Apple pays a quarterly dividend. Taking a look at Apple's 5-year chart here, they are up 475%. This is an absolute banger here. This is a great purchase if you're looking for a growth stock that also pays dividends. The next stock I'd like to go over is McDonald's. Now, McDonald's is an interesting company when it comes to their business plan. When a franchisee comes to them and says, "Hey, I'm interested in starting up a franchise on this corner lot," what McDonald's does is they buy the land and the building and they rent it back out to the franchisee. And so McDonald's gets paid a franchise fee and then they get paid rent. And so their business plan is very solid. And it's not necessarily about selling the burger, it's about getting the land and getting the franchise fee. Very solid business plan. McDonald's has a 2.4% dividend yield. They have increased their dividends for 43 consecutive years. Their payout ratio is 61.25%. Their 5-year growth rate is 7.94% on average each year. And they also pay a quarterly dividend. Over the last 5 years, McDonald's has increased a total of 85%. So that is pretty solid growth on top of the dividend as well. Next in line is company CSCO, ticker CSCO. Their dividend yield is 3.13%. They have a 46% payout ratio. Their 5-year growth rate is 11.76 average per year. And they have increased their dividends for 9 years. They also pay a quarterly dividend. And over the past 5 years, it looks like CSCO is up 144%. Next in line is company Caterpillar, ticker CAT. They have a dividend yield of 2.08%. Their payout ratio is 51%, and they have increased their dividend for 23 consecutive years. They pay a quarterly dividend, and taking a look at Caterpillar's 5-year chart, they are up 250%. Up next is Realty Income, ticker O. Now, this is one of the companies that is the most boring company you could ever take a look at, but that is not necessarily a bad thing. Boring companies that have a solid game plan do really well. And so this is one company that does amazing. And I will leave a link above if you're interested in taking a more in-depth look at this company as far as their numbers and their breakdown of how their company works and their game plan. One thing that I love about Realty Income is that they pay a monthly dividend. Their dividend payout is 4.5% a year, and their payout ratio is 84%. Now, this parameter is higher than the numbers that I spoke about earlier as far as payout ratio, but REITs are required to pay 90% of their earnings in order to maintain its tax-free status. And Realty Income's 5-year chart is up 31% on top of an amazing dividend. Next batter up is company Lowe's, ticker LOW. Their dividend yield is 1.35%. Payout ratio is 27.54%. Amazing thing about this company is they have increased their dividend payout 57 consecutive years, and they pay a quarterly dividend. Over the last 5 years, Lowe's has increased by 190%. Next in line, we have company 3M, ticker MMM. Their dividend yield is 3.31%. Their payout ratio is 61.6%. They've also increased their dividend payout for 62 consecutive years. And they also pay a quarterly dividend. 3M is definitely more of a safe pick out of these top 10 dividend stocks that I've chosen. They've only increased 16% over the last 5 years. But that being said, it's a very safe company to invest into. Next in line is a company that has always been extremely innovative, and they've changed the way that they've done business and everybody else in the world has done business. And that company is Microsoft. Microsoft has a dividend yield of 0.92%. Their payout ratio is 30.4%. Their 5-year growth rate is 10.1%, which is absolutely incredible. Each year to increase your investment by 10% is amazing. On top of that, they have increased their dividend payout for 17 consecutive years, and they also pay a quarterly dividend. Microsoft is another growth stock that I've chosen here, and it has grown 388% over the last 5 years on top of their 0.9% dividend. Number 2 on my list is Coca-Cola, ticker KO, coming in with a dividend yield of 3.26%. Their payout ratio is 76.98%, and they have increased the dividend payout for 58 consecutive years. They also pay a quarterly dividend. Now, one interesting thing about Coca-Cola is that they are 3 times larger than their next closest competitor. They are extremely established in their space, and they are still growing each year on top of paying a solid 3.26% dividend. Over the last 5 years, Coca-Cola has increased by 19%. This is another stock that is a more safe play. They are very solid and consistent with their numbers. And last one on my list is Procter and Gamble, ticker PG, coming in with a dividend yield of 2.48%. Their payout ratio is 55.5%. They have a 5-year growth rate of 3.44% a year, and they have increased their dividends for 64 consecutive years. Now, over the last 5 years, Procter and Gamble has increased by 75% on top of their amazing dividend pay. Thank you guys so much for sticking with me until the end here. Do me a huge favor. If you found any of this useful, hit the like button. Also, leave me a comment below with some different dividend paying stocks that you guys love. And also, every Monday, I invest $250 into the stock market where I do a deep dive into a certain stock. And so if you find that interesting, then you'll have to check that out. Anyway, I hope you guys stay safe out there, and until next time.